Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to have a micro analysis look at exactly what's happened over here with this breakdown of the Bitcoin price. And we'll have a look at that in the actual context of the bigger picture in this view here of the inverse head and shoulders. But in order to actually make sense of all this, we really need to have a look at the overall bigger picture over the last 12-13 years, considering these halvings, these red vertical lines on the chart here. And we'll also have a look at the 60-day cycle to make sense of exactly how everything fits in with the 60-day cycle view. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we start, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any important investment decisions. We're going to start off with this BLX chart for the previous 12 to 13 years of the Bitcoin history. The red lines, as you can see, are the halvings, and the next halving is over here around by April, May next year in 2024. And what happens over here is really determined by what has happened in the past before the previous halvings in this section over here. So before the first halving here, you can see that we made a peak, came down in a bear market, we bottomed out, and then before the next halving, we made two more peaks before the blow off top to the top of the end of the cycle there. And before the next halving, once again, we had a bear market, bottomed out, we made two peaks over here before the blow off top to the next cycle top over here in 2017. Then the third halving followed exactly the same path as the first two halvings, where we had the bear market, the bottoming out, and then here we had only one peak at the $14,000 mark in June 2019. Before, we had this COVID situation here, and then this was followed by, once again, a blow off top to the 64,000 and then the 69,000. So the question is, will the current situation over here follow exactly what's happened in the previous three cycles? So if we start off from the first halving over here, exactly what happened, after bottoming out here, we made these two peaks. And as we've said before many times, but it's very good to review this once more, the first peak here came to just below the 50% mark before we had quite a bit of a correction over here. And then the second peak came up to the 61.8 mark over here. And these two peaks happened before the first halving. This is quite interesting actually, this one here, because the 50% mark that we've got is actually resembling exactly what's happened in the current cycle in 2023. So we'll have a look at that a little bit later, but keep this in mind that the first peak after this bottoming out before the first halving, we came just below the 50% and then had this correction before we moved on to the 61.8 mark over here. And if we have a look at the second halving, which was here back in 2016, we had the blow off top at the end of the first cycle. This was in 2013, came to the bottom of the bear market, bottomed out, and then we had these two peaks over here. And this could be another technical peak here as well, but this was the second peak really. The important thing is to actually do the Fibonacci retracement to these peaks. So in this second halving, we actually had a 50% Fibonacci retracement as the first peak, that's there, and then the second peak came all the way up to the 78.6. And then it was after the halving that we got that blow off top. And if we move on to the last halving that we got in May 2020, we'd peaked out at 2017, bear market down here, bottomed out, and then we had this one very big peak at 14,000. And the Fibonacci retracement to that was exactly at the 78.6 over here. So with that historical context, we know that after peaking out and bottoming out, the first rally or the second rally comes to at least the 61.8 or the 78.6. And in the first halving, we came up to the 50% Fibonacci level here. So we know that at least one peak will come to at least the 50%, 61.8. So this is the region we really need to be aiming at in the current cycle, which brings us to this current cycle now. So we peaked out at 69, had this bear market, bottomed out, and so far I say, because I don't think we've actually come to the end of the first rally yet. Although we've had premature peaks here at the 25,000 level and this 31,000 level. And the question really is that just like we peaked over here, came back with a little correction, went back up, are we having this little correction here to go back up to make that actual first peak here? That's the real question. And no one knows that. But if we do the Fibonacci retracement, that may be giving us a clue as to what may happen. So if we take the Fibonacci retracement from the top at 69,000 to the 15.4 here, we can see that we haven't, just like in the first halving, or just before the first halving, we came just below the 50% level here. So we didn't quite make the 50% or the 61.8 or the 78.6. And we have, between where we are now to the halving, we have virtually exactly 1 year, 12 months. So in this period of time, it would be safe to say that based on the previous historical context, we should be making at least one peak between 50%, which is exactly around 32.5, or more likely the 61.8 and the 78.6. So these are the two levels which seem the most probable that we should be hitting between now and next year, not in the next week or 2 weeks or 5 weeks. Of course, that's possible, but highly improbable. But the general bigger picture is that we should be, before this next halving, next April, May 2024, we should be hitting these two levels, which are at around about the 40,000 over here and 50,000 over here. And that has been our narrative for the last many months now, since we bottomed out over here. And that narrative has never changed so far. So the narrative still is quite intact, and all because we're having a little bit of a correction over here. It's very similar, if you have a look, to what we had over here when we got rejected at 25.2, just like here, and that created this inverse head and shoulders pattern and this neckline at the 25.2. So we'll have a look at the micro analysis over here, but we needed to have a look at the overall bigger picture before we can even analyze what's happening here, because sometimes what people can do is to get so focused on the smaller picture over here that they actually forget where the actual context is that's creating this smaller picture view here. So before we leave this bigger picture view, we must keep in our mind that we so far have not come to the first peak or the second peak, if there's going to be two peaks, but certainly one of the peaks is going to be at this level here at 40 or at 50. So these are still the two critical levels that we must keep in mind. And at the moment, we're just in the direction of that. Wherever and whenever that's going to happen, we really don't know. But never forget that when you're on this journey, the destination has still not been met according to the historical context. So just keep that in mind. It's actually quite amazing when you have this overall bigger picture view that this development over here seems to be very similar to the current development over here. It seems to be that we've planted this bit onto this bit here. And what seems to also be developing is that although we have this very strong neckline at the 25.2 dollar mark here, we know that Bitcoin tends to have a habit of staircasing its way up. So once you break a neckline, you go up, you come back down to the same staircase level as before, then you go up and you come back down to the next staircase. So it has this staircase progression when it's on the upward trajectory. Okay, so the current picture is this. We have this inverse head and shoulders that we've been mentioning, and I've just mentioned it again in the context of the historical 12-13 year chart. We have this very strong neckline at 25.2 thousand over here, which we broke out. And this is a massive iron wall that's been created on its way up. It really would take a lot of momentum and a lot of selling pressure to break this down over here. The other thing to remember is that Bitcoin doesn't do the obvious thing. So the obvious thing here is that it should come back down to the 25.2. So that's the obvious level. But will it do that? We really don't know. And that's why people who are now selling at this point, because we've broken down below this range over here, this is a very dangerous thing. If you wanted to sell, you should have been selling up here. Because just like down here, when we came to these levels, it came down here, the obvious level was here, but it turned around, went higher, and made a higher high from here. And once again, when we came down to this point, the obvious level was 18.3. We never got that, and it turned around from there. So you have to be very careful that if you're thinking 25.2, which is obviously the obvious level, that it's going to come down to those levels. Yes, it may do that, but the history of it, as you'll see, isn't actually on your side. It seems the natural place to find support, but Bitcoin doesn't play to anybody's natural support levels. So we'll just have to wait and see. So I'm just trying to give you a very honest and very neutral view of what Bitcoin could possibly do. Of course, if we break this, not that I'm expecting it to break this support level, but if we do break this level, we'll be back to this neckline over here at around about the $23,000 mark. And that would make sense when you do the measured view of this head and shoulders pattern. So what we've got now, the overall view is that we've got a very big, large pattern of the inverse head and shoulders, and this move, all of this, is actually part of this inverse head and shoulders move here. And the reason for that is that when you do a measured move for this inverse head and shoulders from the bottom here to the neckline of the 25.2, that gives you a 63% move to the upside. And if you move 63% from the neckline up there, that takes you to about 41,000. So we are on a journey up here from the breaking of that neckline to the $41,000 mark, according to the classical charting principles of an inverse head and shoulders measurement of this from the bottom here to the neckline. That should give you a measured move to 41, and that fits in with that historical context picture that I painted for you earlier on. It doesn't mean it has to stop there. It could obviously still go to the 50,000, but that would be a natural, proper place for Bitcoin to find some sort of resistance. So with that in mind, once we've broken the 25.2 here, we're on this journey up towards that 50,000. So it shows clearly to me, anyway, with a high degree of probability, that we still haven't come to the end of the first rally. We are in the midst of that first rally, and along the way we're going to get these oscillations. And we're now currently in the middle of another one over here. So that is where we are in the context of the historical picture of Bitcoin. In the immediate past, over here with this inverse head and shoulders, and the 12, 13 year bigger picture as well. So coming back to this over here, I've been mentioning over the last few videos that what we've got is a head and shoulders pattern developing over here. And the neckline was at 26.8, and that's just now broken down from that point. But keep in mind that this little picture over here, this head and shoulders, is only a smaller part of this larger inverse head and shoulders, which we're in the middle of playing out over here. So if we have a closer look at this head and shoulder picture now here, with everything in context, we can see that there's nothing really to be worried about. Yes, the 25,200 is a natural place, but as we know, Bitcoin can easily turn around from here, or it can go down to the 25,000, and less likely, highly improbable, that we're going to break this level and go much further lower. So really, those are the three possibilities from where we are. And the measured move for this here would be from the top of this candle here to the neckline at 26,800, which is around about the 13-14% level here. And that would take the price all the way down to around about the $23,000 mark. I'm not saying that's what it's going to happen, but the measured move for this head and shoulders is down to the 23,000. But you have to have that with the context that there's a huge iron wall here of the 25.2 to navigate through. So it's not going to be that easy. Of course it's possible, but highly improbable considering the bigger picture inverse head and shoulders and the resistant point that this 25.2 thousand is. So just keep that in mind. And if you've been following me on Twitter, you'll know that I've been mentioning this head and shoulders pattern over the last few days when it was coming down to the 26.8 level here. And I mentioned in the last tweet there that the head and shoulder key support is at 26.8, and while the measured fall is around the 14%, if it breaks, which is 23,000 as I've just showed you, it still has to get past the iron wall of the 25.2, which is the neckline of the much larger inverse head and shoulders. So would not expect any fall to breach this. But obviously Bitcoin can do whatever it wants. We must always know that. Currently it was breaking below the long-legged doji candle, which I mentioned a little bit lower than that here. So you can see that this was a long-legged doji candle, and I said at the time that this long-legged doji candle has the power to conduct the following price action along here, and we must really wait before we break above or below to know exactly where this is going in terms of the 60-day cycle. And at the time of this picture, this green candle was going to be looking like an outside bar bullish candle. But in the end, that candle closed as a red outside bar bearish candle. So that was a clue that the price was then going to come to the downside. But as we can see now, this long-legged doji candle, the top of which was around about here at 30,050, and the bottom of this was down here at 27,230. And once we broke here with a daily candle, that was it. So we've now come down on the next day, which is today, and formed another lower low from this point here. So we could quite easily jump from here because 25.2 just seems too obvious a level which Bitcoin doesn't normally play to. And only time will tell whether Bitcoin will play to whatever narrative here. So let's have a look at the 60-day cycle to give us some more clues into what could possibly develop over the next few days. Okay, so the current candle here is on day 63, as you can see here. So we've gone past the 60-day cycle and we're now in this second part of the window here where the Bitcoin price could quite easily make a new cycle low, wherever that's going to be, to start the new 60-day cycle to the upside. Within the context of the 60-day cycle, we are within the green range over here. So this green support line here, over here, and these are at the actual cycle lows over here at the 51 days, the 70 days, and the next cycle low would be around about here at around 24,000. So this is also a possibility that we come back down into this 60-day cycle, find support on the green line before we move to the upside. So this is very important. The previous two cycles have hit the green line. It doesn't have to hit the green line, but it is a good marker that it could possibly do that. The main takeaway would be from here is that we previously had a 45-day low for the cycle here, and we were looking at that as a possibility that the new cycle may have started here. But as you can see, we've broken below that level now, so that's invalidated the 45-day cycle low thesis over here. So that's now knocked out. And we're now waiting for some sort of a bottoming out pattern within this window, and then know that the next cycle will start from that point. So quite clearly, this cycle is going to be more than the 60 days. So that's really it in terms of the bigger picture, the medium picture, and the smaller picture of exactly what's happening with this fall in the price. The strategy for me has always been, as I've mentioned many times, that 90% of my portfolio has been riding it all the way from the 15.4, and I've ridden down these moves all along, and I'm riding this down as well. It really doesn't matter to me. I'm not going to be shaken out by these little movements. However, I do have 10% of my portfolio which I do swing trades with, and for the first time it looks like I'm going to be stopped out on one of my trades. So far, all my trades on the swing trade side of the 10% portfolio that I've got have actually been very successful, and I've been sharing those with people on the Bitcoin Miners Club that we've got running here. But on Wednesday, I did actually bring to people's attention the possibility of a swing trade, but I also mentioned that we haven't really bottomed out on the 60-day cycle, but there is a possibility to take a small position on just one trade, and I did that on the Cypher. It looks to me that when the market opens at 2:30 UK time here, it looks like that I'm going to get stopped out. My stop loss was at 190 and I got in at 2.08. So we'll see if I have to be stopped out on there. But so far, I haven't been stopped out on any of my swing trades, but it looks highly probable that I'll get stopped out today. So that's one of those things that you have to accept as a trader. And if you are interested in joining the Bitcoin Miners Club, please remember that I also do the 60-day cycles in the context of the Bitcoin miners, so that we look at the 60-day cycle from the angle of the Bitcoin miners. And if you want to have more detailed analysis of the 60-day cycle and other bits and pieces about Bitcoin, then it would be a very good idea to join our videos on the Wednesdays that we do exclusively for the Bitcoin miners. So for the price of a coffee per month, which is around $4.99, you get 4 detailed videos, technical analysis on Bitcoin, the Bitcoin miners, and also opportunities for swing trades. If you want to join the Bitcoin Miners Club on the Wednesdays for those exclusive videos, then all you have to do is to actually click the join button over here. And this will give you access to all the previous videos that we've done. We've done so far around about 6 special features on very high potential, although high risk Bitcoin miners. And all of the videos are actually posted on the membership tab on my channel over here. And that'll give you access to all of the videos down here. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.